Okay, so let's just hop right into it. I called on the admin signals in the Discord, NZD USD for a buy and a sell. Just kind of put it out as a trade setup. We were looking to see a break of the trend line to align with the cross of the MACD.
You said as a buy?
I had two trade ideas.
Are you talking about the 4 you posted?
This was Sunday night.
Yeah.
So Sunday,
I remember
as everything was kind of transpiring. Because yeah, there was a pretty good buy setup, 4-hour channel, 71 retracement landing right on that trend line, and it was kind of setting up to look to be a reversal, but we just didn't get this break of the trend line, which would have signaled the entry, specifically on the 30-minute because it was a 4-hour channel. I'll kind of get into that in a little. But yeah, then the other one was the sell because it was two-sided, two different possible outcomes. We wanted to see a rejection at the short-term bearish trend line, which would have been this trend line here. And then this will indicate sellers aren't letting up. Entry will likely be based off a break retest of the major channel. So we were looking at it to come out and bounce back. Okay, I'll pull this up. I'm actually really happy with how this panned out. I believe the signal, how's it going, Ryan? I believe the signal got sent out around here. Sunday night, what am I, UTC? I am, I guess it'd be this. Sunday night, somewhere around there, I think. Oh no, over here, maybe. I don't know. It went out at some point here. Not gonna get too heavy onto that, but yeah. So this went out. It was looking pretty good for the buy. Oh, here we go. Yeah, it was looking pretty good for the buy. And yeah, but we obviously had some major rejection coming in. So yeah, we didn't get the break of the trend line. The trend line at the time of the signal was looking something like this. That was our market data at the time. Jesus, buggy. So yeah, we definitely just didn't see what we wanted to see for the break of this trend line. So we end up seeing the bigger picture, end up seeing this trend line get broken. And with that retest that I said, where we'd be looking for the entry, I mean, you could have entered up here. There was some good 4-hour candles signaling a reversal, or at least sellers still in control. It kind of lines up with this area here. Let me get this stuff off my graph. So yeah, it was kind of setting up nice with this little liquidity area here. And yeah, so you could have got in right here on the break retest. I mean, it wasn't picture perfect, but the candles made it. We got a, that wouldn't be a two-way top or a double top. Kind of a doji, but not ideal, but double bearish with the reversal candle still at the top. So, I mean, if you got in here or here, you would have been pretty well off. You could have hopped on the 1 hour for a better entry, but that's a little iffy with what we're seeing. But yeah, I wanted to see some sort of break retest on these order blocks. Let me go back. Because yeah, the order blocks are really a really good, powerful tool. They can definitely get you some good entries. We've had one here. These green candles in the bearish trend. And we had one here. So yeah, these are our two order blocks. that I was looking for a break retest on, and it actually happened quite perfectly to where I set up my arrows. So I was very, very happy when I was sending this signal out yesterday. Yeah, yesterday at 6. So I'll show you what I seen when I sent this out. So I was on the 30-minute yesterday at 6. I'm going to go Toronto. 20. So yeah, I seen this right here. This is what I was seeing. So we have, let me get all this graph again. Okay, so what I seen when I was sending this signal out was this. You had the break of the 4-hour channel, which aligned perfectly with my technical analysis. It came right into these order blocks for the retest, just like how I wanted for my technical analysis. Then we got this double top formation here, where it aligned with this little liquidity area, kind of making equal highs. A nice indication of just the bigger players aren't letting this drop. So we get this move. It bounced a bit. It came back up, made that double top, and I got in, and I specifically wanted to signal on this tweezer top. So if you aren't familiar with tweezer tops, I'll show you. So pretty much it's a bullish and bearish, or a bearish and bullish candle that has the same size body and roughly the same size wick. Oh, here it is. So we got an ideal entry right off these 30-minute candles. Picture perfect. Right where I signaled it was right here. And yeah, that's what I seen when I signaled this out. Perfect break retest on those order blocks I showed you. A double top with the tweezer tops aligning for the entry. And where I decided to place our take profit, I wanted a modest take profit and stop loss because I know that this could definitely have potentially reversed. So I wasn't going to be playing it big, wasn't going to go for the home run. But I believe it was a 20 pip. Let's see. And no, 15 pip with the 20 pip stop loss. So 15 pips take profit. Our entry was right on the 15. 66.15 right there. Then we were looking at 66, which actually ended up being pretty perfect. I said, if you're going to go for take profit 2, go no lower than 65.95, just because what I was seeing at the time that I was sending this out was market having this right here. Looking at previous price action and data, I was aiming for these lows right over here, which is kind of where people will be wanting to push the market to meet with these lows again, fill those orders. And when I mean people, I mean banks, institutions, stuff like that, the people who actually control the market. And why I specifically picked 6600 is because it's an institutional level. These institutional levels, if you haven't been in any of my other calls previous to this, your institutional levels are going to be, so inst levels, those are going to be your 00, 000, your 20, your 40s, your 60s, and your 80s. Sometimes it will be the 50s because that's the kind of quarter theory playing in, but generally this is what you're going to see for institutional levels. So we got the 000 aligning with the 6. I mean, there's your 50s, your 80s, 40s. Then you can also bring it down to the double zeros. And if you're counting just pip-wise, your big numbers, so like your 70 cent area, that would be your triple zeros if you aren't counting that last digit. And that's really how I place most of my entries, my take profits, my stop losses, is through those institutional levels, because those are the levels that really are, one, psychological, two, are where the market's most attracted to, and you just kind of see it repeat time and time again. And we've seen right down here is the market got pushed perfectly to just past the 66 level, allowing us, oh wait, 66 is here, but allowing us to secure some profits pretty modestly and pretty fast too. I mean, that was within, from time of signal, that was an hour, hour and a half maybe. And if you wanted to tighten up your entry off these tweezer tops on the 30-minute, if you were looking at the 15-minute, again, we have this double top aligning with the doji candle, that reversal indecision candle that also aligns with this liquidity area. I mean, if you're using these candles in no area of importance, you aren't going to be getting the same results as if you're using these candles in these important areas like this. So we got this reversal candle followed by a nice engulfing, which end up signaling our tweezer tops. So again, just ideal setup, modest take profit, nothing home run. And that was for the NZD USD trade. I personally did a sell on US CAD just because it's one of my favorite pairs, because I feel like I'm contributing to the Canadian market a little, as if, but what I seen here was a break of this trend line aligning with a cross of the MACD. And I mean, really simple as that. These are maybe 75% of my trades is a trend line break aligning with the MACD. I mean, in this instance, we got more of a break retest than the MACD cross. Still makes it valid, still holds up. I think I actually got in around here after this kind of move happened.
What time frames do you look on for the trend line to be broken?
Okay, so yeah, that's a very good question. When I'm looking for these trend lines, I'm looking on the higher time frames. So I'm looking for my trend lines on the 1 hour, 4 hour, if I can spell, and the daily. So that's where I'm trying to find these trend lines. And then when I find the trend line, so in this instance, I found it on the 1 hour. That kind of gave me the best market structure to the trend line. Because if you go to the 4 hour, it's a lot less nice looking. So with this, I seen this trend line also kind of aligns as a bear flag, because we have this initial impulse from this high creating this low, ignoring this kind of consolidation area. But we've seen this move with a accumulation area, a bear flag happening. So I was already looking to sell, and my whole net position for US CAD in the long run is very bullish or very bearish. So I'm looking at US CAD to really drop down over the next like 4 or 5 months. I've been talking about it forever. So when I'm finding these trend lines, I'm looking at the 1 hour, 4 hour daily. And when I find them, so in this instance, the 1 hour, I drop down 2 MetaTrader 4 time frames. So MetaTrader 4 is the 5 minute, 15, 30, 1 hour, 4 hour, daily, weekly, monthly. So in this case, I found it on the 1 hour. I dropped down 2 time frames. So you want to drop down to the 15 minute. If it's a 1 hour, you want to drop down to the 30 minute. If it's a 4 hour, Then for the daily, you're looking at the 4 hour and 1 hour, because the daily is more, it's kind of tougher to find where to get your entry on the break of the MACD, but I find if you get a good entry off the 4 hour, it usually aligns with the full reversal and you'll catch a big move. And I even used this for NZD USD. It was a 4 hour channel. So I was looking at the 30-minute. And if you even go into the, into here, my charts are on the 30-minute looking for this break. So yeah, that's how I see these trend lines and how I drop down for my entries. But going back, I seen US CAD making this formation, setting up for a nice drop. I was just waiting for the market to break the trend line and cross. So again, we had the cross happen roughly here, and that would align with that. So we get the break of the trend line back here with the nice little retest, and that retest aligns with this break. And I end up getting in a little late, but still good around this area. And I rode this out for maybe 20 pips. I'm really being modest. I mean, I'm not really going for these home runs. My home runs really come from the higher time frame trades when I'm doing a 4 hour analysis. But yeah, I typically align it with the fib level. This one I didn't, but generally speaking, when you align things with other data, you'll get better at spotting these things. You'll get better at finding zones to take profit, stuff like that. And that really concludes all the trades I've been looking at, or all the trades that I've done. I haven't really been too active. Just work's been kicking my ass. But I do want to take a look at gold real quick, because gold's been doing some crazy shit recently. Let me actually load up my other chart. Oh, what do I got going on here? Okay, well, actually, I want to check this out, what I have. So I was looking here. That's still not too bad looking. Okay, I'll come back to this. But yeah, I want to take a look at gold. God damn. Okay. So, let's see here. So what I'm looking at right now is, if you caught my analysis that I was posting, maybe, how long ago was it? God damn, maybe 2 months ago, back in June. Or no, it's July now. So maybe 7 weeks ago, right before this breakout, I was looking for a reversal up here. So I have all these data points lined up. I have all my little market structure things happening. I had my liquidity area for if it broke out, where it could reverse at. And what I'm currently looking at is where we can come back down to. What I'm seeing is this 1400 level. Again, institution, it's a double zero level. Let me fix this. So we got 1400, nice round even number, easy on the eyes, very sexy. And yeah, I could definitely see gold coming down to test these lows. Specifically, I'm not really looking too much at any structure forming. We definitely have some equal highs kind of panning out here. some equal lows that align with that 1400 level. And when I speak in terms of equal highs and equal lows, what will happen is silver was displaying some really good examples of this. Where was it? So, right back here. So what will happen is you will see the market making equal highs. So what that means is it comes up to the same price point and drops. Then soon as you get a break and close above that price point, that's when the liquidity will start to come into the market because they've broken that kind of psychological level. They've accumulated orders of selling. So in this instance, retail traders, people who don't know a lot, will see these wicks and be like, oh, shit, it's a good sell. The market's not going past that. And that's what they want you to think. So we mark out our equal highs. What kind of institutional level can we line this up with? There, 20 mark. Remember, 20, 40, 60, 80, 00, 000. And what do we have here? We got the 20s. 20, 00. It gets a little tricky when you're doing like things like gold, silver, US 30, S&P 500. But currency pairs, you'll find these institutional levels pretty easy. But yeah, what you see here is the market coming up and meeting these equal highs. Then we get this spike of liquidity coming in, and I mean, look at this candle. It shoots right up, breaks it by just a little micro bit. Then it comes back down and shoots all the way back up. Then you can see this time and time again. Again, right here, we have equal highs. I'll delete. Oh, fuck. I'll get rid of this, get rid of that, and get rid of that. So again, same thing. We get these equal highs. Let's see if we can't line it up with an institutional level. We got that 50 area that I was telling you about that will sometimes be used. So in this case, we have the 50 level being used. And I mean, this was really heavily used. Like this whole, each one of these 30-minute candles was just time and time again being used as just equal highs. Then we get our spike through, signaling our push up. You could have caught maybe 60 pips if you caught a good entry, like going down to the 15 and catching an entry off that. But yeah, so that's what I mean when I speak in terms of equal highs. And even if you were looking at the 15 and got in on this, the same thing still holds true. If you got in here, your max drawdown might have been 100 pips, but you could have yielded anywhere from 100 or 80 to 200, depending on how your risk is and how strong your stomach is to hold these positions. But yeah, that's what I mean when I speak in terms of equal highs. So back to what I was talking about. You haven't noticed I kind of go all over the place. I was on the daily, wasn't I? Yes. So again, speaking in these terms, we are looking at 1400 for a retest. Maybe, let's see if we can't line up a second zone. What's this? 1390, 94, 95? No. Maybe off that area. Not too strong. But I'm going to hold strong with my 1400 as the retest area. We have this area of 3400 or 1434. Let's get that nice and neat. So 1334, making some equal highs. And what we're looking for price to do something like this. Come down, come up, maybe do something a little like this. and either stall out at this area or get this shoot up to probably meet one of these wicks. I'm going to say dead in the middle, and that's where we get our retest. And this would also align with Elliott wave. If you're familiar with that, it's pretty much the theory that the market moves in waves, being A, B, C, D, E, 1, 2, 3, 4, 5, A, B, C. Just doesn't really matter. We have our 0, 1, 2, 3, 4, 5. Looks all pretty when I do it without any market data, but I'm sure you're probably like, how the fuck does he know this? But really, I'm just fucking bullshitting. This is just a scenario that could play out. I mean, really, we could see price come back down, retest this, and head back down for a corrective wave if we're speaking in terms of Elliott wave stuff. But really, generally, no one really knows what the market's going to do. You just got to create all these different scenarios with everything you know and just react to what happens instead of predicting what happens. Just like what I did with NZD USD. I predicted what happened, but then I reacted to what the market did. And ironically, it really did what I was hoping it would in one of the two scenarios. And that's why I took the trade. Because, I mean, if it really went my way and lined up to every data point that I mentioned, I mean, why wouldn't I take it? Furthering on the US Canadian dollar analysis, I haven't been on my little Scott's Corner in a while. Where is it anyways? Shit. Trading. Scott's list. Here we go. We got US CAD. Tons of politics behind it. Tons of market structure behind it. Whatever. But yeah, I've been talking about US CAD since June, even before that. I mentioned it back when we were in our Messenger days before Discord. So really, this has been the holy grail of long-term trades. And what's happening is if you go to Canadian dollar currency index, each currency that we trade, the majors, the pound, the Australian dollar, New Zealand dollar, all that, they have their own currency index. This is a compilation of what signals their strength, and you can do analysis to further confirm your theories from it. So my theories were we have these identical wedges playing out, identical bear flags or bull flags playing out, where we have our impulse up, our accumulation areas, and then our breakout. Then this breakout would also align with the impulse up, our accumulation area, and we're looking at a breakout. So that being said, what I was looking for is a break of this wedge, this triangle, to align with the, let that load, to align with the breakout of, oh shit, I still got all this shit on. To align with the breakout of this channel. Ironically, inverse of what the Canadian dollar index is doing. So, that being said, what I'm seeing right now, further in my analysis, is we have this trend line that was broken. And we also have this trend line going from the wicks. We can even kind of touch it with that. And just remember, trend lines, line of best fit, most touches without really forcing it. Oh, shit. So we had the breakout of this, and now we're kind of having this pullback. This is our third week on a pullback, because each one of these candles is a week. And really, it's kind of ideal what is happening. you'll see me mention order blocks a lot in my analysis because it's really, really a strong point to use. So an order block is on the higher time frames. You can use it on the smaller, but not as it doesn't hold as true. But we have this order block. In an order block, see all these red candles? This green candle within all those is the order block. That's where they're looking to accumulate more orders. That's where they've made an area where they can push it back to. Specifically, I'm looking for this week to end more around this 76 area, 79 area. I don't really want to see it close at 75.8, especially not 75.7 or lower, because that just kind of means that this order block hasn't held true and we won't likely get a bounce. If we can get back to the open at 75.9, that would really be ideal. That would be a doji candle, an indecision within this trend, align it with this strong data point or area of interest, then we could really be looking at the breakout of this trend line. That being said, let's take a look at US CAD. And really, this is how I do all my analysis, is data point after data point. I mean, high time frame, dropping it down. This is really just going to be me beating the heck out of top-down analysis. I hope it brings value to you guys, because yeah, just sorry, I'm looking at the messages people are sending me about the video. But yeah, just because this is how I look at the markets, this is how I get my trades. It's really more of a patience game. I'm not really one to impulsively trade. Oh, look at that. Perfect. So what I have here is this trade that I was looking at fucking weeks ago before I kind of put it on hiatus. So we have this trend line. We got this trend line, right? We got this one here. And what we are looking for is a break of it to align with the MACD cross. It's a 4-hour trend. So we're looking for the break on 30-minute. So as it comes closer, actually let's extend this out a bit. As it comes closer, reaching that trend line, we can finally see this break, candle close. I'm sure that's kind of where the MACD crossed. No, it's not, of course. But that being said, since the trend line broke and the MACD was already fairly high past the 0 line, you're just waiting this one out. You're waiting for better market conditions to play out. And really the MACD was holding this momentum. And I mean, it didn't really give you an ideal entry. You could say that there was a bear flag or a bull flag that happened, where you get this push up, this consolidation area, then the breakout. But I mean, you really need a good eye to be seeing that. But yeah, just goes to show that this simple trend line break with the MACD will work time and time again. It's a trading system, and that's really what I want to teach you guys through this training, is this trend line break system, top-down analysis, how to look at each one of these graphs, looking at institutional levels, order blocks, Fibonacci, putting it all together to really allow you guys to be able to trade independently, be looking at the markets on your own without second opinions or second guessing yourself. I mean, I think that's all I got really for examples and stuff like that. GDP is probably still shit in the bed. Yeah. Nothing new there. Let's see how it's looking with the weekly and stuff. So yeah, I'm looking at it to come back down to here. I really didn't think this day would come for it to meet these lows. but hey, it is what it is. It's unfortunate because a lot of people were long, but that's how the market makes its money. How I'm looking to trade this is having something look like this. Where is my feed? So having something that looks like this happen. Whoa, what happened? So what I did was I just copied those candles, and now I'm going to place them over here. So I'm looking at something that aligns with pretty much what happened in the past. The market comes down, kind of acts funny a little, then breaks out. That's kind of what I'm looking for before I get into position on this. But let's just fire through the markets. I'm kind of running out of stuff to talk about besides what I've already been looking at. So what we got is, let's see what oil is doing. Sorry, I get really sidetracked sometimes. Okay. Oil's still not doing anything that I want it to. Okay, so what I do really to scan the markets is I go either 4 hour, 1 hour, and I just kind of start flipping through stuff. I mean, I'm staying away from gold, silver, and the indices right now just because it's in uncharted territory. I'm not messing with that. I want to have strong confluence with my trades, and if it's in all-time highs, specifically for US 30, I'm not touching it. I want to have some data points previous that I can trade off of. But yeah, so what I'll do is I'm just flipping through the market, seeing what the market's doing, marking these trends that I see. So from here, I can see these data points lining up. I'll probably go to there, having those wicks extend a little, maybe even tighten this up a bit. Bring that out. Maybe there's a flag that we can get in on. So yeah, that's just kind of what I do when I'm looking to set up some trades. I'm setting these trend lines, and I'm just kind of looking and waiting. US JPY is not doing much right now. I stay completely away from US chef, but very, very, very good example of what a flag is. So again, you're going to be able to spot these like nothing by the time this 4 weeks is done. You have your impulse up. You have your accumulation area, your correction area, your whatever you want to call it area. Then you get the breakout. And I mean, look at that vicious breakout from here. Absolutely stupid. When can we predict the breakout? We can't. We really can't. So you really have to just be looking. So since this is a 1 hour time frame, even a 4 hour, it looks pretty good on. You want to be looking at the 30 and the 15 minute time frame charts to be able to line up your trades to kind of catch this breakout. Because I mean, look, we got these huge wicks extending, which can definitely trap traders into the wrong positions. And you just want to be on the right side of the trade. That's all. I mean, even the 30 minute would have trapped you if you were waiting for the candle close. Even the 15 minute, if you waited for that candle close, you're still getting a pretty late entry. But again, speaking in terms of market structure, I can see this doing the exact same push that got it into where it is. Let me just tighten this up a bit so I'm not getting invalid data. Let's go from there to about there. So I'll be watching this to see how it performs. But if it does anything in the regards of anything I know about markets, it's going to do something a little like this, where it's going to have the exact same push out that it had as the push in. And I mean, we have our strong $1 data point right here. Let me just mark that. So really, if you got into a trade using this system, waiting for the candle close, you're getting in right here. Stop loss would probably be below here, which is unfortunate, but what is that? That's 50 pips. And you're looking at a potential of 75. If you get the full extension on that, you're looking at pretty good. Let's say 100. So you're looking at risking 50 to gain 70, potentially gain 100. Pretty good trade. I mean, you'll be looking at holding it for quite a while. Potentially from the time of entry, I thought it was a lot bigger, but I'm looking at 15. From time of entry, you're looking at a day to potentially a week before you can take some profits on that. I mean, you could even take profit now, but you aren't getting your full extension. I would at least wait for it to reach closer to these highs, but it's your call. I will save that though. That's going to be on my watch list. And again, just flipping through the markets. Really just kind of seeing what sticks out. And that's really it. I mean, you just want to be looking at areas of interest. This is definitely interesting to me. I don't trade the US peso that much just because it is volatile as hell. But definitely a strong data point right here, this 1920 level. Definitely something to be on the lookout for. Definitely see this turning around here. Definitely since it made equal highs with this. See how the 1 hour is looking. These still extended. 15 minute. 15 minute coming down as price is going up. So you're still kind of waiting. Nothing really signaling an entry off the US peso right now, but I'll add it to the list. Let's see, flipping through the markets. Trying to trade the Turkish lira and the South African rand not too long ago. That's just crazy. People who trade those are ridiculous. What am I seeing here? Okay, just another good example. So, impulse to our accumulation. And what we're looking for is something to break. It looks like we're kind of forming a ascending wedge, I believe they're called, where it wedges in on each other going up. But yeah, what we're looking at is something to break here. Speaking in terms of currency index analysis, we're looking at the Canadian dollar to get stronger, so that can push the market up. What's the JXY doing? Let's do daily. Did it end up breaking out of this can? Here. Let's see. I have markup over here. Okay. It hasn't quite yet broken out of this wedge. It is pretty indecisive right now. It has passed this trend line, potentially signaling a down move. So we're looking at something like that. Let's get that. So yeah, we're looking at something like that maybe. So if the Japanese yen goes down as the Canadian dollar goes up, that would make the Canadian dollar yen move viciously up. Or if things go reverse, we could be looking at vicious down movements. But as of right now, we'll just put that on our watch list. Again, not really forcing trades. Same thing happening with the Canadian Swiss franc. I don't really look too much at news anymore, just because I find if it's not Brexit or anything to do with the European Union and the pound stuff, I'm not really looking at it too much. I mostly stay away from Euro and GBP pairs right now, just because the craziness that's happening in their markets. Definitely long-term downtrend for the British pound. Again, speaking on the terms of flags, I can show you an example of structured movements with these flags. So we get an impulse. Then we get what we call our correction or accumulation. You can have that in mind however you like, but keeping it consistent with how we draw flags, marking up the lows so we can catch that breakout. Now, what gets us into these flags will get us out. So going from this high that we formed here, look at that. Perfect. Absolutely perfectly structured move. And I mean, it's really rinse and repeat with this method. Trading gets a little boring after you learn it because you're just waiting for the market to do the same thing over and over, and you just cash in, cash out. Your risk management is very structured. You take profits are structured. For this trade specifically, it's on a daily, but I'd have a fib, wait for that breakout, and align it with some take profit zones. So if we are getting on the breakout here, I'd really be looking at that 71 because it lines with the low of the flag, the start of it. That'd be a really good liquidity area to get out at, which kind of aligns with over here. And again, the 78.6, it aligns with these data points pretty freaking good. So, or you can go balls deep and go for the 100% retracement. You got any questions? I know we only got one guy in here, Matt, but Matt, you got any questions? Everything I've been saying kind of makes sense. You're kind of seeing how I'm looking at stuff now.
Yeah, this is perfect, honestly. Just like something to help open my eyes when I can look at the charts now too.
Yeah, and honestly, like for myself, I'm really sticking to the weekly and daily. I mean, now I'm kind of transitioning into more 4-hour, 1-hour time frame stuff, but really these trend lines and stuff like that, it's rinse and repeat. I mean, I don't even know what I'm on right now, GBP odd, but again, just impulse to accumulation areas, wait for these breaks, and then look for market structure, market areas to get back out of. You look for your entry, you look for your exit. I mean, this specific example here, I mean, I don't have the full data if it goes past 2002, but I couldn't see it making this full move all the way down to 130. So I'd be looking at a maximum, a maximum of maybe like 145 for this, really catching these lows. But again, it's rinse and repeat. I mean, I love using US CAD as an example, especially since the Canadian index lines up with it. But just, again, time and time again, structured flags are the best things to trade, or at least my favorite things to trade. So we have our impulse. we have our accumulation area, and then we have our structured move. What gets us into these will get us out. I mean, this one's not fully ideal, but again, if you're lining it up with different market points, different liquidity areas, especially if you're going for a balls deep target like the beginning of the flag, lining it up with even the 125 institutional level, you could have definitely captured some damn good pips. I mean, in the span of this breakout, if you got in, let's really go deep into this right now. So back in what, 2016? Oh, damn it. I hate trading views sometimes. But yeah, back in 2017, 2016, you'd be looking at this and you'd just be waiting time and time again just for this to break. I mean, you even get a little retest on that, which is even better. Because if you go deeper onto this, going deeper down the rabbit hole, let's try and find this. Okay, deeper down the rabbit hole. We're leading up to this impending breakout. Let's say we got all the market data right up to here. We get these moves, and I mean, with every trend, this is how the market moves. You get your impulses, then you get your corrections. You get your impulses, your corrections, your impulses, your corrections. Or your impulse, accumulation, impulse, accumulation. And again, I mean, this is directly aligned with the Elliott wave theory. You get your impulse, your correction, impulse, correction, impulse, time and time again. You can see this on multiple time frames. So you can have a, let's say, again, speaking in terms of Elliott wave, this could be a daily impulse, correction, impulse, correction, impulse. Then within that, you can have, let's say, a 1 hour, let's say a 1 hour impulse, correction, impulse, correction, impulse. So let's say this 1 hour is yellow and your daily is your gray. It's really just time and time again. This is how the market moves. And you'll see it just happen time and time again. Because for every up move, there needs to be some sort of release. Or every down move. So in this case, we get our down moves. I'd say this is an impulse. We kind of get a correction area here where it just kind of bounces, then a breakout. And again, this impulse bounces, breakout. And you're just looking to get in on these. You're looking for the overall impulses. Then you're looking at the, God damn it. This is why I hate trading view. Then you're looking for these flags to form, these accumulation areas. You just mark them up how you see them, and you're waiting for just the breakouts of it. And again, if you just get in on these breakouts, following these rules, following the MACD crossing, you can align these pretty solid. I don't think I'm ever going to get back to that data point. But yeah, so what I was saying, again, I get off track. 2017, you're looking at this. You're waiting for these just market to break this trend line and give you a sign of hope that you're going to continue down. You have your structured move already set out where you want to take profit, that 125 area. Gosh darn it. That 125 area, wherever that is, I can put that on here. 125. And if you're doing Fibonacci, which I strongly suggest doing with these flags, let's line it with some strong data points. Let's go 125. 125 to 380. So you're using both institutional levels, lining up your fibs. You get in on the breakout, and after this accumulation area fails or breaks, you get that candle close, you hop in, and let's do a short position to replicate how you would exactly take this trade. So stop loss would go above that recent high, and you would want to set your take profit wherever. So if you're going to the 61.8, you just set it to the 61.8. And I mean, look at these data points that you can align with. This area of liquidity here. I can go further in depth on why these areas are good, but just looking at these strong points where the market's turning, you want to be getting out at, because that's where likely the market will turn again. Let's say you had a few orders on this breakout, you can shed your position at these areas. And again, the 61.8, the 71, both very, very good areas to take profit at or look for the entry. In this case, you're taking profit at 61.8 and 71, and your final falls deep take profit that's hedged by stop loss in profit would be your 125. And really, what we're doing right now with this is, move all John tools. What we're doing right now with this is the exact same thing. We have our impulse that gets us in. I mean, I'm going to be damned if I've been talking about this for months and this doesn't pan out. But I'm just about certain that it's going our way. So yeah, I mean, our data points could be anything from that to this. Can be anything from that to this, depending on the time frame you're analyzing. But what we're looking at is the same exact thing we've been looking at time and time again. I mean, I'm currently waiting for this accumulation area to break. It's quite a steep one. If we're really looking in depth, we can do some fib. Let's go all the way to 3020. Okay, so this one to 3560. So yeah, what we're looking at, potential 618 retracement. I'm doing this right? No, I got this flipped. Gosh darn it. Gosh darn it, Barnaby. So what we're looking at is for a 50%, the 61.8. Maybe it will hold up at the 38.2, but you never know. We just gotta wait at this point. And yeah, what I'm looking for is just some sort of break of this structure. Align it with 30-minute, since it's a 4-hour time frame structure. Align it with 30-minute cross of the MACD, and then you're golden. Pop in, stop loss in this case would be up here, unless it makes it something like this. Let's say the market does this, pops up, makes a high with this, and then pops back down and breaks. Let's say this is the case that the market's going to do, and our entry was here. What you would want to do is, if your entry is there, your stop loss is above this most recent high. Then your take profit is as desired. And really, this is how I scan the markets. This is how I find my trades. It's quite simple of a method, nothing too serious. As for NZD USD, I'm still looking at this buy. I'm not taking this trend line off. I'm still looking at this break to come up. Further analysis. Let's take all this junk off the graph. Further analysis for this. I mean, we're sitting at a area that could potentially be used as some liquidity zones for market reversals. We do have this order block, pretty fat order block right here. Has seemed to hold, but again, if you go to my signal list, I'm looking at a short on this daily showing a sign of bear flag, and as you probably already know, because I've said it a million times in this, what gets us into these will get us out. So line this up, set that there. So I'm looking at 64. I mean, really probably 60, 64.5, lining up with these. But hey, is what it is. I'm gonna end the recording here just because I'm really just going over the same stuff, beating it into you guys. The next training will be actual market education. Hopefully bring some good knowledge to you guys. I don't think I have any trades that I'm taking right now. So yeah, I'll end it there. Hope you guys have a good time going over this. I mean, by the time you see this, you've already done it. So thank you for watching the full thing. I appreciate the hell out of you guys for even doing this with me. This has really been a test to see if I can turn people who have somewhat zero knowledge and zero knowledge of the markets within 4 weeks becoming a profitable trader. So I appreciate you guys doing this with me. I mean, it's a learning process for me to help bring you guys the most value. Appreciate you guys. Thank you, Matt, for tuning in.
Oh yeah, buddy. I appreciate you too. It was a good time.